So let's start off by Googling futures trading and take a look at the results right here. Here's one from Wikipedia, the futures contract Wikipedia page. It's got a lot of good info here, so I suggest you guys also take the time to look through this and read through it. Here's a good website called Investopedia on futures. This place has a lot of good info as well. And here's a website down here called TD Ameritrade. Learn how to trade futures and explore the futures market, understanding the basics, trading futures, all this good stuff. Here's some videos on YouTube that you can watch as well. I'm gonna look through this stuff and see what I can pick up with my limited knowledge, and we'll see what we find.
2 hours later.
So I found this website called The Balance, which seemed like a pretty good place to start. The article is called What Are Futures right here, and let's look at this little section right here. What are futures? Futures markets trade futures contracts. A futures contract is an agreement between a buyer and seller of the contract that some asset, such as a commodity, currency, or stock, will be bought or sold for a specific price on a specific day in the future. Okay, I'm still confused, I have no idea what this really means. But we're in luck, because I actually found this pretty good analogy or explanation on Reddit. It really helped me understand, very simply what futures trading is. So what I did was I just Googled what is futures trading Reddit, and I clicked on the first result right here, and here we are at Reddit. ELI5 right here basically means explain to me like I'm 5. So let's look at the question. How does trading futures work? I've been told it's a good and cheap way to play the stock market, but everything I've read on it confuses me even more. And that's perfect because that's exactly where we are. And I read the first response right here provided by this guy, BitObear, and it pretty much goes like this. This is you, and this is BitObear, and let's say he's a turkey farmer. So he comes up to you and he says, hey, if you give me $50 right now, I'll get you a 10-pound ready-to-eat turkey 6 months from today on November 22nd. And you like that idea, so you guys agree. So what's going to happen here is you're going to give BitObear $50 now, and he's going to give you a signed contract or a promise that he'll deliver you the turkey 6 months from today. And what's happened here is you guys have bought or sold a future commodity or service. And this is basically futures trading in a nutshell. Now, BitObear has 6 months to get you a turkey, right? So now he's got some work to do. He's going to go back to his farm and hatch the egg, feed the baby turkey, and then when it's big enough, he'll probably slaughter it and have it frozen and packaged so he can deliver it to you by Thanksgiving. If he can make all of this happen for less than $50, let's say $40, then he gets to keep the remaining $10 that he saved. But if all of this stuff costs more than $50, let's say $60, then now he has to pay an extra $10 to produce the turkey, right? So in this case, you're the one that comes up $10 because 6 months ago, you paid $50 for a turkey that's now worth $60. And trading futures basically means trading these documents or these signed contracts that we were talking about earlier. So you can do this with other things like metals, like gold and silver, or you can trade futures with energy like oil, gas, petroleum. You can trade futures in different currencies. You can trade futures in different stocks, or even bonds and treasuries. Cool. So now that we know that there's different types of futures, let's just go and Google types of futures contracts and take a look. First result. What are the different types of futures contracts? Here's the ones that we mentioned earlier. Let's just click on this result right here, and if you go down, you can see stock futures, index futures, currency futures, commodity futures, interest rate futures. Okay, cool. So these are the different types. And from here, we can, again, Google commodity futures individually and check out some of these results down here. Again, I encourage you to take your time and read this stuff yourself, do your own research. But if you take a look at this website right here called Bloomberg, they have a lot of good examples. Like there's energy right here, goes through all the crude oil and natural gas, refined products, emissions. These are all different types of commodity futures. There's metals here that I mentioned earlier, gold, silver. If you go down, there's also other precious metals, industrial metals. Yeah, there's so much stuff. These are all real futures contracts. There's agriculture too. There's like grains and what is this? Softs. I don't even know what that means, to be honest. Livestock. Oh yeah, there's our turkey example right there. And we can try using Bloomberg to look at currency futures. There's currencies right here. Yeah, here's all the currency exchange rates. Now let's try to look up index futures. Let's see, CNBC has some index futures right here. And look at what we got. Dow futures, S&P futures, NAS futures. Basically, I didn't know what this was either, but I looked into it. Dow basically means Dow Jones. It's like, the top 30 biggest companies in the US. So if you click on it, you can see, if you scroll down, there's a chart right there. If you scroll down, you can see like summary, key stats, latest news. And if we go down here, S&P futures, S&P is basically like the top 500 companies. It's just, these are all combinations of really good companies in the United States. For someone who, doesn't know anything about this, like me. NASDAQ is like the top, it's like 3,000 companies or something like that. And yeah, if you click through, you can see all the info, the chart, the individual charts, you can see their stats. I don't know what these numbers mean yet. I'm hoping to in the future. We're hoping to in the future. So yeah, here's a S&P mid cap 400 E mini. Like I still don't know what any of this means. I'm just looking at the basic charts and the info. And I'm going to be honest with you, I don't know anything about interest rates yet. Hoping to look into this stuff for future episodes, but if you know about interest rates, then you can also see interest rate futures on CNBC right here. This one says 30-year T bonds, which I'm assuming is treasury bonds. Like I said, I don't know much about this yet. All I know is that treasuries and bonds and interest rates have to do with like loans and debt. That's all I know as of now. Well, we have the power of the internet, so there's plenty of information out there that we can look into, as we go. And our next question is, where does trading futures happen? And the way I found this was when I Googled how to trade futures, I found this article right here from TD Ameritrade. And if you go down, you can see this little section right here. It says, the futures market is centralized, meaning that it trades in a physical location or exchange. There are several exchanges such as the Chicago Board of Trade and the Mercantile Exchange. Traders on futures exchange floors trade in pits, which are enclosed places designated for each futures contract. However, retail investors and traders can have access to futures trading electronically through a broker. Okay, so it seems like there are a bunch of different exchanges. So let's just go back to Google and look up futures trading exchanges and see what we got here. If we go down, there's on Wikipedia, there's a list of futures exchanges, and it looks like different continents, different countries, all have different exchanges. Like here in the United States, there's this list right here, the CME group, I'm assuming is the Chicago Mercantile Exchange that was mentioned earlier. If we go down, there's, exchanges in Asia, Southeast Asia, South Asia, Western Asia, and Europe. So I guess futures trading happens in all these different exchanges physically. But something interesting I found here on Investopedia, if you scroll down, there's a part where it says futures exchanges used to have an important physical presence, but it's no longer true that these locations hold as much meaning as they once did, because trading can happen from the computer of anyone connected through the internet to an exchange member broker. Trading is decentralized around the world and happens nearly 24 hours a day during the week. So it seems like technology has pretty much evolved the world of futures trading. I guess it used to be a thing where people would have to go physically to the exchange, but now it's like everybody has a computer or a phone where they can sign up with a broker and trade futures. So, we're in a good place as starters because, it sounds like we have so many more opportunities that other people before didn't have. So that's definitely something to think about. And that brings us to our last part, which is why should we trade futures? So let's just Google why do people trade futures? And we can go to this result right here from Investopedia again, called The Advantages of Trading Futures. And it says, futures are a great vehicle for hedging and managing risk. If somebody's already exposed to or earns profits through speculation, it is primarily due to their desire to hedge risks. And if you keep scrolling down, there's more advantages to futures trading that Investopedia gives you. But my key takeaway was that it really helps with hedging, which also means risk management. It's like if you place a bet that the price of gold is going to go up in 3 months. You don't know that because it's just, it's all speculation. But you can also place some bets that it might go down. And that's kind of like the concept of hedging or managing your risk. You kind of place bets that, goes up or down. So you're kind of like in a way on both sides of the trade.